Ladies and gentlemen, thank you for standing by. Welcome to the Tel Aviv Stock Exchange Q2 2023 Results Conference Call. All participants are at present in a listen-only mode. Following management's formal presentation, instructions will be given for the question and answer session. For operator assistance during the conference, please press star 0. As a reminder, this conference is being recorded August 8th, 2023. The recording will be publicly available on TASE's website. With us online today are Mr. Itai Ben-Zeev, CEO, and Mr. Yehuda Ben-Ezra, CFO. Before I turn the call over to Mr. Itai Ben-Zeev, I would like to remind everyone that this conference is not a substitute for reviewing the company's annual financial statements, quarterly financial statements, and interim report for the second quarter of 2023, in which full and precise information is presented and may contain, inter alia, forward-looking statements in accordance to Section 32A to Securities Law 1968. In addition to IFRS reporting, we might mention certain financial measures that do not conform to generally accepted accounting principles. Such non-GAAP measures are not intended in any manner to serve as substitute for our financial results. However, we believe that they provide additional insight for better understanding of our business performance. Reconciliations between these non-GAAP measures and the most comparable related GAAP measures are included in tables that can be found in our earnings press release and in the slide presentation accompanying this call. Both can be accessed on the English Maya site and in the investor relations portion of our website at ir.tase.co.il/en. Mr. Ben-Zeev, would you like to begin?
Good evening, Israel time, everyone, and thank you for joining us today. I'm delighted to host you in our earnings call. I'm pleased to report the results for second quarter of 2023. We have maintained our upward trend. We achieved an organic revenue growth of 2% in the second quarter compared to corresponding quarter, despite headwinds from the political turmoil relating to the proposed judicial reform and lower number of trading days in the second quarter of the year. The adjusted EBITDA in the second quarter remained almost unchanged from the corresponding quarter last year, totaling 35.6 million shekels. The profit in the second quarter of 2023 totaled 18.8 million shekels, representing a 32% growth compared to corresponding quarter. Yehuda Ben-Ezra, our CFO, will provide a detailed discussion of the financial statements later. As a result of the uncertainty surrounding the proposed judicial reform and the global rise in interest rates and inflation, TASE leading indices continue to underperform in comparison to leading international indices. IPOs have come to a standstill, and capital raising by public companies significantly reduced compared to the first half of 2022. However, the trading volumes of government bonds and T-bills have been steadily growing. Despite the higher interest rates, the companies turned to marketable bonds for debt refinancing. In the first half of 2023, the business sector raised 43.9 billion shekels through offerings and private placements of bonds to institutional investors and the public, compared to 45.7 billion shekels in the first half of 2022. Despite the political turmoil, the assets under management of TASE indices surged in the second quarter of 2023, compensating for the withdrawals in the first quarter. In the first half of the year, the TASE equity indices gained 500 million shekels in AUM, and the volume of OTC assets that track the TASE indices grew by 1 billion shekels. TASE equity indices currently manage about 41.3 billion shekels of ETFs, tracking funds, and OTC transactions, and their resilience reflects the significant untapped growth potential of the Israeli economy, which could be realized once a political consensus is reached. Israel's unique demographics, robust economy, and relatively low free float of TASE equity indices act as strong growth engines. We are confident that the TASE index reform, which I mentioned in our previous call, and which will take effect this coming November, will improve the indices and boost their AUM. Foreign investors' activity on TASE remains strong, with total net purchases of shares of 4.6 billion shekels from January through May 2023, in addition to purchases of 14.1 billion shekels in the full year 2022. According to the Bank of Israel, net purchases of government bonds by foreign investors on TASE totaled 20 billion shekels from January through May 2023, compared to net sales of 1 billion shekels in the full year 2022. These purchases have generated strong trading volumes in our government bond market. In line with the goals of our strategic plan, we have entered into a groundbreaking agreement with Fireblocks for the development and advancement of activities in digital assets. This collaboration will allow TASE to enhance its value proposition to the Israeli market by establishing for the first time a dedicated, transparent, and supervised framework for digital asset activities. For example, we will be able to offer qualifying institutions custody services for cryptocurrencies and other digital assets. We are making progress with our trading strategy and liquidity enhancement. In July, we launched a new weekly option series on the TA35 index that expires on Tuesdays, in addition to the Thursday expiration series. This additional expiration day is designed to accommodate the growing popularity of the weekly options on the TA35 index, and we are confident that it will increase investors' engagement in our derivatives market. Furthermore, in July, we launched the Trade Repository, an OTC real-time reporting system which enables investors instant access to information on transactions executed off the order book, all in alignment with international standards such as MiFID II. The publication of transactions on the Trade Repository is subject to a fee. We believe that providing more direct and transparent access to information will help to optimize trading by both local and foreign investors, putting us on par with the leading global capital markets. And now, I would like to update you on the buyback plan. Since the initiation of the plan in May 2022 until after the reporting date, TASE has purchased a total of 5 million shares at an average price of 17.6 shekels per share, amounting to 88 million shekels. The remaining balance of the buyback plan is 12 million shekels. Additionally, in the second quarter, we executed a special buyback of 4.6 million shares at an amount of 86 million shekels, which was not subject to the prescribed restriction and the safe harbor protection terms. In conclusion, we will continue to pursue new growth opportunities and work towards achieving our strategic goals for the coming years. And now, I'd like to hand over to Mr. Yehuda Ben Ezra, who will provide a detailed review of the Q2 results.
Thank you, Itai. In the current quarter, we continued to achieve strong financial results, with total revenues reaching 93 million shekels, despite a 5% reduction in the number of trading days. Our revenue increased by 2% compared to the corresponding quarter of 2022. The adjusted EBITDA similar to the corresponding quarter of 2022 in total to 35.6 million shekels. Our adjusted net profit climbed steeply to 20.4 million shekels, representing substantial growth of 42% compared to 14.3 million shekel in the corresponding quarter of 2022. In the first half of 2023, we continue with a strong financial result. Revenue totaled 192.9 million shekels, an increase of 2%, excluding the non-recurring effect in the corresponding period last year. The increase in revenue totals 5%. The adjusted EBITDA in the first half of 2023 reached a historic high record of 79.1 million shekels, representing a 9% increase compared to the corresponding period of 2022. The adjusted EBITDA margin has also improved significantly, increased to 41% compared to 38.5% the corresponding period last year. The adjusted profit in the first half of 2023 totaled 46.5 million shekels compared to 29.2 million shekels in the corresponding period last year, significant increase of 59%. I will begin with slide number 5, which shows some of the key highlights from our result from the second quarter. Revenue from services totaled to 92.9 million shekels compared to revenue of 91 million shekels in the corresponding quarter of 2022, an increase of 2%. The increase in revenue is due mainly from data distribution and connectivity services. Our income from non-transactional services increased to 62% compared to 61% in the corresponding quarter. Expenses totaled 72.6 million shekels compared to 68.1 million shekels in the corresponding quarter of 2022, 7% increase. The increase in cost is due mainly to the increase in computer and communication expenses with respect to share-based payment, and to marketing expenses. The adjusted EBITDA for the second quarter of 2023 totaled 35.6 million shekels compared to 35.8 million shekels the second quarter of 2022, a decrease of 1%. The adjusted EBITDA margin decreased to 38.3% compared to 39.3% in the corresponding quarter. Financing incomes in the second quarter of 2023 totaled 3.6 million shekels compared to financing expenses of 3.4 million shekels in the corresponding quarter of 2022. The increase is due mainly to the transition to financing income as a result of the positive return on the company's investment in market-based securities. The adjusted net profit increased significantly and amounted to 20.4 million shekels compared to 14.3 million shekels in the corresponding quarter of 2023, an increase of 42%. The increase is due mainly to an increase in revenue and the transition to financing income. After reviewing the highlights of our financial results, let's take a deeper look at the breakdown of our revenues and expenses. I will now discuss our revenue in the second quarter of 2023. In detail, let's go to slide number 7. Our revenues from trading and clearing commission decreased by 1% compared to the corresponding quarter of 2022 and totaled 35.5 million shekels. The decrease is due mainly to the reduction in the number of trading days, which contributed 5%, and to the reduction in the trading volumes of corporate bonds, which contributed 4%. In opposition, a 6% increase in revenue results from the T-bills issuance and the cancellation of the maximum commission on OTC transaction, a 2% increase in revenue results from an increase in revenue from mutual funds. Our revenue from listing fees and annual levies decreased by 1% compared to the second quarter of 2022 and totaled 20.1 million shekels. The decrease is due to the reduction in revenue from the examination of prospects at the rate of 2% of total revenue, which was partly offset by an increase in the annual fees for mutual funds at a rate of 1% of total revenue. Our revenue from clearinghouse services increased by 3%, totaling 19 million shekels. The increase resulted from an increase in clearinghouse services to companies. Our revenues from distribution of data and connectivity services increased by 15% compared to the corresponding quarter of 2022 and totaled 17.4 million shekels. A 12% increase is due to the updating of the index usage price list, and 5% of the increase is due to revenue from data terminals for customers outside Israel. Expenses in detail. I will now discuss our expenses in the second quarter of 2022. Please go to slide number 9. The expenses related to employee benefit decreased by 3% compared to the corresponding quarter of 2022 and totaled 37.1 million shekels. The decrease in the expenses mainly results from a decrease in variable compensation and due to the increase in capitalization of expenses for software development for internal use. Computer and communication expenses increased by 21% compared to the corresponding quarter of previous year and totaled 8.9 million shekels. The increase resulted mainly from an increase in the maintenance cost of new computer system and personal cost. Marketing expenses increased by 53% compared to the corresponding quarters of 2022 and totaled 2.4 million shekels. The expenses are affected mainly by the timing of the performance of the group's marketing activities. The depreciation and amortization expenses increased by 2% compared to the corresponding quarter of 2022 and totaled 30 million shekels. The increase is mainly due to the upgrading of infrastructure and launching of new products. The financing income in the second quarter of 2023 totaled 3.6 million shekels compared to the financing expenses of 3.4 million shekels in the second quarter of 2022. The transition to financing income this quarter resulted from positive yield on the company's investment in market-based securities, as compared to a negative yield in the corresponding quarter of 2022. In addition, the increase in the interest rate generated interest income on the deposits of the company. Now let's move to the balance sheet, slide number 11. As of June 30, 2023, our equity totaled 614.6 million shekels. The equity ratio, including the deferred income from listing fees and excluding open derivatives position balance from our clearinghouse activity, is 88% of the balance sheet. We have approximately 319 million shekels in cash and investment in financial assets. We don't have any debts. The excess capital at the end of the second quarter totaled 536 million shekels compared to 613 million shekels at the end of 2022. The excess liquidity at the end of the second quarter totaled 190 million shekels compared to 257 million shekels at the end of 2022. The decrease in the excess capital and the excess liquidity is attributed to the buyback purchased both shares in amount of 174 million shekels. The board of directors also approved the safety cushion, which serves as an additional layer for handling stress scenarios, and it is at discretion of the board of directors. Cash flow. I would like to review our cash flow highlights. Please go to slide number 12. TASE free cash flow increased by 13.7 million shekels compared to the corresponding quarter of 2022 and totaled 17.9 million shekels. Operating performance contributed to the second quarter of 2023 cash flow of 10.7 million shekels, and 3 million shekels from decrease in investing activities is due to the timing of implementation of the group investment work plans in the quarters. TASE financing activities decreased by 75.1 million shekels compared to the corresponding quarter of 2022 due to the payment for the acquisition of treasury shares that was increased by 98.1 million shekels. And with that, I will turn the call back to our moderator to conduct the Q&A.
Thank you. Ladies and gentlemen, at this time we will begin the question and answer session. If you have a question, please press star 1. If you wish to cancel your request, please press star 2. If you are using speaker equipment, kindly lift the handset before pressing the numbers. Your questions will be polled in the order they are received. Please stand by while we poll for your questions. The first question is from Dan Fannon of Jefferies. Please go ahead.
Thanks, and good evening, gentlemen. Wanted to, I guess, follow up a little bit on just the environment and maybe what you guys are doing as a company to, continue to execute and drive growth. And one of the products, I think, is how you mentioned around the weekly options that that is going to be announced. I guess maybe just expand a bit upon the derivatives opportunity, where the business sits today, what you think this new product rollout might mean, and maybe from a broader distribution perspective, who you expect this to maybe bring to the market that isn't participating today.
Yeah, hi Dan. So clearly, because, we've been mutual for so many years, we still have things that we need to do catch up to other market, and this is part of the organic growth that we see ahead of us. And the derivatives market is, a very good example for that. And by talking with the market participants, clearly when you have things happening in your environment like we're having in the past few months, then the volatility moves in, and by having more products, then you have more engagement. So we already issued in July the weekly options, and we've seen traction in those elements. And we are constantly talking with the market and thinking of more products and more services that we can give it. And it basically will help to accommodate not only the local players, but also the global players, because we have seen interest on various parts. I mentioned before the significant number of the government bonds that have been acquired by international investors. So overall, the way we look at it is volatility is part of the game as an exchange that runs, both bonds, equity, and derivatives. And we have to be very tuned to the market and to modify also some of the things that we want to develop in order to accommodate the market needs.
No, that's helpful. And I guess as you think about the kind of current environment, understanding that the backdrop isn't great, but as you think about conversations with non-local participants, bringing in more international players, whether that's via co-location, listings, remote members, as all, I guess, update on those kind of dialogue and or backlog or conversations.
Sure. So we have seen no impact because of the Israeli situation on the global arena, meaning that if you look at our data services, we've seen a constant demand and growing demand from international players extracting our data services. So we are continuing all of the discussions about the remote member and the co-location. Actually going to start the third piece of our co-location Rex. So the current political situation in Israel has no negative impact on that front. Clearly there is an impact on our indices, as I mentioned, and also on our new listing. because it's very difficult to estimate when and how there will be a consensus. I think that everybody in Israel agrees that this is, it's not helpful, but unfortunately our politicians are arguing, who's to blame for that, and they can't find a solution that everybody will be happy about it. But we don't see any negative impact if you look at all our non-transactional segments that we run also going forward.
Understood. And then just on expenses and thinking about what your priorities are here, middle of the year, the backdrop you've just outlined, is marketing probably less of a priority given the other uncertainties locally, or just trying to understand, the first half run rate versus maybe thinking about the second half, if there are any real changes?
Yeah, sure. So clearly the first half was lower because of the situation. But, it can be a point that, if in 2 months' time everything is reached, the whole momentum will change in Israel. Because if you look at what happened in Israel with the protest and all of the talking, clearly it shows how many people here care about the country and want the country to be successful. So if the politician will reach some kind of a resolution, then we will try to get all of the dedication and caring and everything all together, how we can strengthen our economy. And a good example for that is the Israeli institutions. We believe that the Israeli institutions can be more supportive in our local market. So currently what you just mentioned is correct about the marketing projections, but it can change over time because of the circumstances.
That makes sense. And then just thinking about some of the other longer-term dynamics that you've been addressing, whether that's with some of your stakeholders or ultimately with the regulator in terms of some of the pricing opportunity as you see ahead, is all of those potential outcomes or changes on hold as this process unfolds politically?
No, not at all. All of the things that we are doing has no connection whatsoever to the political turmoil. No, nothing to do with it. We have a new ISL regulator that will very soon step into the office. His nominee was approved. We have a very good dialogue in the past few months with our regulator. We are constantly discussing new things that we are doing. We have been waiting for the new regulator to step in because we want to start push forward the group structure that we announced. And the political situation has no any implication to those dialogues and the things that we are progressing and will continue to progress, including fees and other things that we are doing.
Great. And then just on share repurchase and the buyback, you have 12 million remaining. You've obviously been active, and you had the special buyback plus what you've announced. So as we get towards the end of the current authorization, and given your excess capital position, should we assume, or is it reasonable to assume another re-up of a buyback authorization, or how is the board and the management thinking about capital deployment beyond the current authorization?
Yeah, that's a good question that I don't have an answer for that. We actually discussed it today with our board. We tell it that the advantage of what happened in the political arena in Israel, that it affected our public companies, and it also affected us as a public company. So we took advantage of it by doing the buyback. That's the advantage of what happened. Clearly, we have a very strong balance sheet, and we will need to take it to the board and discuss it. We are in a situation that, we are keep reviewing opportunities and stuff like that, but we are a company that we don't see anything specific that we need in order to continue to grow our revenues. So, we will discuss it with the board, and then we'll think what will be the best outcome for the company. Currently, I don't have an answer to that question.
Understood. Okay. Well, I think that's all my questions. Appreciate your time.
Great. Thank you very much, Dan.
If there are any additional questions, please press star 1. If you wish to cancel your request, please press star 2. Please stand by while we poll for more questions. There are no further questions at this time. Thank you. This concludes the Tel Aviv Stock Exchange Q2 2023 results conference call. Thank you for your participation. You may go ahead and disconnect.